Thanks for joining me, and today I'm going to go over the trades that I took on Tuesday, August 29th, 2022. Unfortunately, today it was a red day. Let's take a look at it. So today I took two trades. The first was on the Qs. Everything to the short side. The market was looking a little bit weak this morning as it opened. All three indices were showing weaker with all the chip names heading down on the day before. So the first entry was on the Qs to the short side. You can see it was taken at 9:52.09. This is market time, of course. You'll see from the chart here on the 2-minute chart for the Qs, pre-market was trading around that 319, like 319.50, 319.60 area. Then it flushed through the pre-market low, which was around 318.24, 25-ish. So I thought the market was going to head lower. It did break through that 317.50 area and get pretty close to breaking through 317, found some support there, then pushed back higher. So it was looking a little bit choppy. However, I was eyeing to break that 317 area as it did test that a couple of times. When it finally put down, it wasn't the best setup here. It was normally like to get in after there's some sort of a pullback. So I was looking for a pretty quick move here. This would have, in hindsight, of course, would have been a great trade to hold at least for a few minutes there. If you look at the order entries for the Q, the put trade I did on the 317 put, got in at $3.06 right here at 9:52.09, as I mentioned before, and only held it for just over a minute and sold it for $3.14. So at this point in the day, I was up about $6 and some change, an $8 trade minus commissions. So at this point, if I had left and called it a day, I would have been green. But of course, had to continue trading. So the next trade would be on the SPY. And looking at the first of the two SPY trades, once again, everything was to the short side. The first was at the 410 strike, the 410 put. Got that trade at $10 o'clock and 48 seconds at $2.58. And since I saw that weakness on the Qs, I was looking for the same break here. You can look at around the same time, that 9:55, right before 10 o'clock, where everything broke down. The market was starting to just get really weak there. So I saw it testing that 411, 410.90 area. Saw the little short green candle as a pullback and thought it might have more strength to continue lower, more strength to the downside. But only got that small wick there. It didn't really have any sort of follow through. So was holding it for a retest. Maybe it would come up and retest the pre-market low again and continue lower, but didn't see any follow through with that. So just got out there with a loss. As you can see, I sold that first order, the 10:02 and 30 seconds. You see the canceled order. I was trying to, I had a limit order set for a profit, but that never realized. So I ended up canceling that order. So the first sell order on the SPY was at, got in once again at 258 and got out at 243. So holding it for just about 2 minutes. And then the second trade on the SPY was basically the same idea. And this is probably where this trade went wrong by even trying to get in here again. But sometimes it can work where you see, it's good if you see the setup to get in. Just because you got stopped out before doesn't mean you shouldn't try it again. But that might not have been the best strategy for this trade. So looking at the second SPY trade, you'll see it's hanging around this between that pre-market low around 411.26 and testing the low of the day, or near it anyway, of right around that 410.80, 410.75. So you look at the second green arrow, that was where they took the second order, and this was for the 411 put. Took that at 10:05 and 58, got filled right here at 299. Now, the funny thing about this trade is it actually was profitable for a second. So if you look at the candle where I got out here, you see that second red arrow on the right. The wick did actually drop lower, so it was profitable. It got up to, I think, around maybe 306 or 307. The problem is I was trying to break even with the previous loss on the SPY. So that's a great example of how you shouldn't trade your P&L and just trade the chart and trade the price action that you're seeing, because it could have got out with a small profit here and would have only been down maybe a couple of bucks or on the day, instead of being down, what I was close to $25. So This really wasn't the best setup, but it was worth taking a shot. It did retest that bottom. I thought I was going to eventually push lower, but wasn't necessarily the strongest setup, especially when it's fighting. It was basically trying to short support here, and the market was just holding this position, holding this level pretty well in the morning so far. And then as you can see, I got out there at 284, so $15 loss here on this one, not including commissions. Got in at 10.05 and held this for a little bit longer, hoping for that downward push. You see, I got it at 10.11 and 50 and 31. So about a 6-minute trade holding it here. So look to do a lot better tomorrow. So basically gave back the profits that I made on yesterday today. So just up about a few bucks or so, giving back most of everything from yesterday. So down today, $25.93. As the case, sometimes when you stay green, it's better just to log off and walk away. But took those trades on SPY. Not the best setup, but not necessarily the worst. Just trying to short that support there didn't really turn out to be. I was pretty much the bottom there, at least in the morning anyway. So try it again on tomorrow. Thanks so much for watching. And if you enjoyed this video, be sure to leave a like below. And if you want to follow the journey, make sure you hit subscribe and hit the bell notifications. Thanks for watching and have a great day.